What's up everyone, my name is Ryan, and today let's take a look at an individual stock, Virgin Galactic, or ticker symbol SPCE. Over the last month or so, they've had a really hard time of things, almost getting to that $30 mark before crashing all the way down to sub 20. But could this be a really good opportunity to load up the boat, as they say, for a long-term investment? Let's take a look at their company and see if this is really a good investment going into the future.
Let's take a look first at this Forbes article, which goes over the Virgin Galactic coverage by UBS. They're stating that potentially there's a 50% upside this year alone. In addition to that, they're expecting space tourism to become an $8 billion industry by 2030. Obviously, this is the total industry itself, which is not only comprised of Virgin Galactic, but potentially SpaceX and Jeff Bezos' Blue Origin. And so potentially all three of these companies will be vying over this industry. They're also setting the buy rating at $25 per share, which is a good 30% or more above the current stock price, which is good to see. In addition to that, it has kind of rallied the last couple days after the long declines that it's seen. So potentially in the short term, we're looking pretty bullish. In addition to that, the long term, we're also looking pretty bullish based on some of these figures. Let's take a look at their chart to use some technical analysis tools to deduce their long-term and short-term price targets for the stock. Let's first take a look at the one-day chart, and this shows pretty much since the start of the year we had a really big run-up going up to $42 just prior to the decline that you see here, entirely due to the coronavirus, and then the SPY falling to low 200s. But since then, it kind of took a while to stabilize. It had a double top here soon after the coronavirus hits, but then kind of dipped. But within the last month or so, it had a run up all the way to the $27.50 level before getting rejected now to where it's at, which is in the mid $17 level, and kind of bouncing around since there. But as you can see, it kind of dipped back up. After this region, we might see some upwards momentum going back up to these higher levels. So it'll be interesting to see. So let's take a look at some tools now to deduce where the stock is going. Taking a look at a closer version of the one-day chart, I use the Fibonacci time ratios to deduce some areas where we could see some change in price. And as you can see, I use this swing high position to the swing low. So this is over pretty much mid-August to a little bit of the late August decline that we had. And so it's a longer duration, so it propagates for a longer time period. As you can see, this one that we had, the 161 level, didn't really give us much. It did climb in price, so it was kind of the lowest, one of the lower points, and it did climb days after that. But then we didn't really see any indication for this swift decline. However, with this 261 level, we did see it was right before the climb upwards that we're seeing now. So that is a good indication that there was some price action due to this Fibonacci time ratio. The only other one that we were seeing propagate from this ratio alone is this further one out that's at the 423 level, and this will happen around late September, the 20th, it looks like. So it's one point to look out for. Maybe we'll see some different price action. Difficult to see what direction that will be because of how far out it is, but potentially it might be, if this continues upwards, it might be a decline. So it's one thing to look out for. Let's take a look still on the one-day chart, but now with the support and resistance lines. As you can see, I marked out the ones that we can see going forward. We saw some strong support going from here. We kind of bounced back up, but we're still seeing some resistance at 18 and then 17.8. In addition, we have some other ones at the about $20 level and $21 level, but potentially we'll have to see a bigger increase in the price to get to those levels. Another key point to look at is this 200-day moving average kind of creeping in. As you can see, it kind of bounced above here, which creates a support line, which is a good indicator. So it was below, but then now it kind of bounced above. So as this goes up, we could potentially see the stock price go up also to kind of use that as a long-term support going forward. but it will be definitely a bearish sign if it breaks back below that value. Short term, I think potentially we can move back up to at least the $20 level to $21 level. Right now, I think we're at the bottom of where we've seen the price fluctuate in a regular level. Obviously, if you would have got in at this $15 level, that would have been the best option here. But I think either sub 19 will pretty much be a good long term play. In the short term, by the end of the year, I think it's completely feasible that the stock price could reach this mid $20 level, which would be a significant increase from where it's at now, which is about $18 or slightly sub 18, and potentially up to maybe the $30 level if there's some good news comes out about the stock. But right now, I think it's looking like a good investment short term based on its current price levels. Long term, also, it's looking quite good. It's kind of in the dip, definitely what we've seen even at early this year at the $42 level. If you can get that within by the end of the year, it would be great to see that. But that's kind of a stretch at this point. So I think at these points, it's going to be a long term and short term pretty good investment. Potentially seeing $20, mid $20 in the rest of the year. And potentially much more than that, as you saw, it already reached 42 at the beginning of this year, and potentially could reach quite a bit more. So good luck.
Thanks guys for watching, but remember to like and subscribe for any more technical stock analysis. Also, you can drop a comment for any specific stocks you want me to take a look over.